I think policymakers need to be sensitive to developments in the economy. In the last two MPC meetings, we have seen a review of MPR. In May, it was reviewed by 150 basis points. In July, I think it was reviewed by another 100 basis points, which brought it to 14%. And if the objective was to reduce inflation or tame inflation, between then and now, I'm not sure that those movements in rates have impacted on inflation in any way that anybody can reckon with. Now, even only recently, the World Bank was cautioning the central banks across the world that they should be careful the way they push this interest rate theory or argument. And it's even more so in an economy like ours, where the linkage even between the financial system and the economy is not so deep. Private sector credit as a percentage of GDP in Nigeria is just about 12%. In many other economies, like South Africa, it's over 100%. In the advanced economies, it's over 200%. So when in those economies you want to now manipulate things by tinkering with interest rates, one can understand. But what is happening in our own situation is that these policy measures will only penalize investors, particularly investors that have exposure to banks. These are the people that will bear the brunt of this. As far as this measure curbing inflation is concerned, I'm not optimistic at all that this can have any significant effect on inflation. And I've all done some studies around the key drivers of inflation.
Right.
The only monetary component that is fueling inflation is the one even coming directly from the CBN itself, which is the ways and means. Currently, ways and means is getting close to 20 trillion. That is the major monetary component. It is not the lending to private sector and all of this that is causing this. So it is those who are in the private sector, who are indebted to the banks, that will bear the brunt of this. And you know what the banks are.
Right.
By tomorrow morning now, all those who are indebted to them will be getting notices of a review of interest rates. At this time of all times, we are talking about high energy costs. We are talking about cost of diesel. We are talking about exchange rate illiquidity. We are talking about exchange rate depreciation. We are talking about insecurity, which is fueling food inflation. These are issues.
When you, Dr. Yusuf, when you heard the CBN governor, I mean, he tried. I was watching him, and he tried to explain, saying that these are economic theories and measures in which inflation is dealt with. So they had no other option but to do this. And he said, in fact, to use his word, this aggressive way in which this has happened had to be followed through because of the available data before them. And it would have been inconceivable for them to have done anything else. Did it sound convincing to you by the measure and degree in which they've increased?
Certainly not. Certainly not. That's certainly not. I don't buy that argument, and that is why, even in managing an economy, and that is one of the shortcomings of this administration, we don't have a core economic policy group that will be respected by all the key agencies of government. That is a major problem. Because, I mean, we can do a study of the drivers of inflation. The CBN was sounding as if it has all the arsenal to deal with inflation, which is not valid. There's a limit to which monetary policy, particularly all this MPR, CRR, can curb inflation. That is the reality. I just mentioned the key drivers of inflation.
Right.
How many of it can the CBN policy check? Can this MPR or CRR bring down the cost of diesel? Can it can it correct the scarcity in the foreign exchange market? Can it curb the depreciation in the currency? Can it curb the problem of insecurity? Can it reduce the problem of transportation cost? These are the key issues. So rather than have a team of people managing the economy to address these fundamental issues.
Right.
Because it is investors that is bear the brunt of this.
Right.
It's like making a scapegoat of those who have borrowed money from the bank.